this stage.
Pleasure, Alishia.
Investors staying wary after Wall Street extended its losses overnight, and as the European policymakers continue to debate on solutions to the Eurozone's debt situations. But from yesterday's performance, anyone's guess how things are going to turn out, isn't it?
Yes, it is, but you can see that people are a little bit nervous. Volumes yesterday were only about 8 billion, and volumes in the market today are also quite thin. So not a lot of people putting money into the markets, and they're trying to wait and see what's going to happen with Europe. Also with the IMF chief being arrested, it does have quite a lot of impact on the decisions that they can make on helping indebted countries in Europe, such as Greece's debt. So that's also been put on hold. So people quite tentative at the moment, Alishia.
What kind of volumes are we looking at in South Africa, Rob, given that tomorrow is a public holiday?
Yeah, I mean, they're very thin. On a very good day, we'll get up to about 15 billion. Yesterday was 8 billion. Today, just before, I think we were at about 3 or 4 billion. So not a lot of volume coming through the market at the moment. I think people are taking money off the table as well into the public holiday. And it's just going to be a wait and see until Thursday.
Of course, on the data front, we mentioned earlier that we've seen that CPI number coming in better than expected, edging up slightly to 4.2%. How much of a surprise for you?
I think it is a bit of a surprise. The market is expecting about 4.4. If you drill down into the core inflation, it's really looking quite low and quite good. So if you take out fuel prices out of that, food prices came down, so a very good number for CPI. And it just goes to show you that possibly interest rates that the forward market are thinking could change by the beginning of, or before the end of the year, might be pushed out into 2012. So quite a good number in that respect. And it just shows you that the Reserve Bank, although watching it very closely, will only make a call once that core inflation starts to move. So at the moment, interest rates steady.
Explain to us then the kind of strength, yes, slight, that we've seen filtered through to the rand, despite that data filtering through and despite the fact that we may well see rate hikes pushed off until the first part of next year.
Well, it's a difficult one. I think that the dollar really is the core to the rand around the world. The dollar's had a very strong bounce over the last week and a half. It was up about 5%. A bit of profit coming in against the dollar around the world. You see that the euro started to strengthen from the low 140s up to about 142 again, and the rand just following that. So a little bit of dollar strength last week, and now it's weakening off a little bit of profit taking. So rand back below 7. I think it also just shows you with the interest rates where they are and CPI coming in that South Africa is still doing okay. Inflation not out of control yet. I think people are happy to keep money here.
Let's take a look at some of those corporate numbers that filtered through today, and PPC really standing out because, you know, when we looked at those numbers at first glance, it really seemed like bad news, like has been the case with many of the construction plays in South Africa. We saw that share price initially dipping back, currently trading above 3% higher.
Yes, it opened up 1.5% lower on those earnings. Earnings were relatively poor. But now come back to up 3%. It's a difficult one. If you take a look at the beginning of the year, they're trading at about 35 rand. They're all the way back down to into 25 rand levels. So the market has really punished PPC with slow construction going forward. And the numbers are expected. A lot of bad news is written into these numbers, and I think the market is thinking that even though possibly going forward that they're battling with cement sales, that they've reached a bottom. And the long-term money slowly coming into the construction stocks bit by bit. So I think a bit of overreaction on the downside, and some people trying to bottom pick on PPC. But it's a very difficult one to purchase so early. I'd rather wait.
Well, that certainly seems to be the consensus view out there, with just a handful of daredevils managing to plug enough courage to actually delve into the construction space right now. Let's take a look at Barloworld, because this is a company that has been highlighted in terms of its diversification and what it actually gives you exposure to, and it seems to be that diversification that's actually paid off for the company.
Yes, all sectors doing really well for Barloworld. Equipment sector doing very well in South Africa, very well in Europe, very well in Russia. So very good yellow metal sales there, and they've increased the yellow metals business in Russia, so looking really good. And all of that yellow metals, which are the big trucks, etc., on the mining side, they're really getting good volumes out of that. So mining really pushing Barloworld's numbers up. And as these mines come on board with very good commodity prices over the next year or two, Barloworld looking really good. On the fleet management side, relatively stable, nothing fantastic, but ticking over there. But the mining really pushing Barloworld, and the CEO saying that going forward into the second half of the year, they expect even increased sales into the end of the year. So really positive numbers from Barloworld, and looking positive for them. Still Iberia, give them a bit of problems up in Spain, but they said that could turn a profit by the end of the year as well, which it wouldn't have done for the last 3 or 4 years. So all in all, a very good set of numbers by Barloworld.
Well, with those numbers putting some of the spotlight on the miners, let's take a look at Anglo's, because it's trying to get through that 340 mark, and it's the first time in a while, but it seems to be coming back quite nicely.
Yes, it has. It traded all the way down to, I think, a low of about 321 last week, with worries about world growth, etc. But they've got a really good set of assets. They've got great iron ore coming on board in South America as well. There's a very big copper mine there, and their mining has been very cleaned up in the type of products and minerals that they hold. So you know, people come in every time there's a dip. People come in to buy the Anglo American, looking very solid here. They've come from 325 back to 340, and trying to break through 340. We've got a target of about 360. So money coming back into Anglo's, they're looking solid. On
the flip side of that, we've got Sasol at the bottom end of the top 40 today, down roughly 1% so far on that share price, and really seeming to battle even with the oil price holding above $100 a barrel, and many questioning what happens to Sasol once that, if that oil price retraces even further.
Yes, it is difficult. Sasol, even when the oil was trading at about 125 a few weeks ago, only got up to about 390. So it couldn't break the 400 level. And since then, it's been retracing quite aggressively all the way back down to about the 350s now. Sasol battling to really make good revenue out of the high oil prices. The demand isn't as good as you know, the world expects it to be, and they're just really battling to get revenue out of a lot of their different their plastics and petroleum products, just away from oil as well. So they're not making money there. So a bit of a difficult situation for Sasol. It's a sell for us. I wouldn't be buying it just yet.